And now to our conversation on Business Edge. The World Bank has said diaspora remittance into Nigeria is expected to exceed $20 billion by the end of the year, as total remittances into the Sub-Saharan African region increased by 1.9%. This was revealed in its latest Migration and Development Brief released this month, which stated that the global remittance flows would continue to grow in 2023, although at a slower pace. Remittances to Nigeria, accounting for 38% of remittance flows to the sub-Saharan region, grew by about 2%, while two other major recipients, Ghana and Kenya, posted estimated gains of 5.6% and 3.8%. To talk to us more about this, I have Oladipo Ajayi, Head, Fixed Income and FX, Chapel Hill Denham Securities. It's nice to have you, Ajayi, join us on the show.
Good morning. Thank you very much for having me on.
And compliments of the season to you. Now, despite slower regional growth, Nigeria's remittance inflows set to, in terms of expectations, is set to surpass about $20 billion by year end. What factors would you say are driving this continued increase in Nigeria's remittances?
Yeah, before now, we saw at the time when the last central bank governor tried to actually put some of the incentives in place to actually lure Nigerians in diaspora to actually remit funds into the country. And some of it is when they actually, a $5 for every dollar that you actually remit into the country is one of the ways to actually lure people to actually bring in funds into the country. And for that, for some time that actually worked, and we saw improved impact in the country. And at the same time, we also noticed that because of the current levels where Naira is currently trading, a lot of foreign guys, Nigerian diaspora, felt that this is a very good opportunity to actually convert some of their dollar holdings to Naira, maybe and actually invest in Nigeria as an economy, whether in the real estate or also in the stock market. So these are some of the things that actually led to the increase that we have seen in the recent past around that.
Yes, you've talked about the difference between the Naira and the dollar and the 5% incentives. And I'm still looking at the World Bank report. It highlighted strong remittance growth in other countries like Rwanda and Ethiopia. So if you are to do a comparative analysis, how would you describe the growth rates and the drivers for those growth, looking at these two countries as compared with Nigeria's case?
Well, for Nigeria's case, and like I mentioned earlier, the Naira dollar level is a key factor. Imagine someone that normally sending maybe like a 200,000 Naira to maybe to a family member on a monthly basis, and that's when the dollar Naira was at maybe 600 Naira to a dollar. But now that it is 1,200 to a dollar, it means that the person just needs to actually send lesser dollar than what the person used to send, maybe like 50% of what such person used to send. And these actually affect the level of influx of FX that we have seen from that segment. And before now, I think it was 2020 that was the first time that we noticed that diaspora remittance actually went below 20 billion. Before then, it used to be north of 20 billion, and it was 2020 that we saw diaspora remittance went as low as about $17.2 billion. And also in 2021, it moved back to about $19.2 billion. So what we are currently seeing now is not extraordinary for us. It means that there has not been any significant improvement. It's just a marginal improvement that what we are seeing. And I feel that this is just a short term. In the long run, we'll start seeing aggressive movement around that, because if you look at the level of people that migrated out of the country in the last 1 year, and now actually factor such number of people to the number of people that will now, maybe in years to come, start remitting fund back to Nigeria one way or the other, it will be bold to say that we expect to see close to 15% increase in such influx of FX in the country.
Oladipo, despite the inflow of remittances, of course, the inflow of FX, we still had issues with FX scarcity, and that was one of the reasons why some companies or multinational companies had to shut down, and it also affected the manufacturers. So is it that these trickle-ins from FX in terms of diaspora remittances did not really have any cogent or valuable contribution to FX availability in Nigeria?
I think it would be unwise to say it doesn't have any cogent impact, because it simply means that if that is not there, maybe it would have been very close to 2,000 to a dollar as we speak currently. One way or the other, he has filled at the vacuum. It simply means that the hole is bigger than what we're actually getting from diaspora remittance. And another factor also is the fact that most of this inflow does not come directly through the banks. Now, a lot of people are now doing more P2P exchange, where you have someone abroad that actually wants to send money, and you need the money. Just say, okay, send it to so account, and I'll give you the Naira equivalent. It simply means that most times those funds are not going directly through the banking system like it used to be in the past. So maybe as a result of that, we are not seeing the huge impact like we would have expected to see. And another reason why this is so is that when you consider the cost of actually remitting money to Nigeria, it has actually gone up from about 7.2% to about 7.9% of the amount you're actually remitting. So if you can get a window where you can actually minimize the cost of remitting funds to Nigeria. Of course, a lot of people will embrace that window, and I think that's one of the reasons why the P2P is more of the way to go for most people actually sending money off from abroad. So it's not that we are not feeling the impact; it's just that the volume is not enough to actually cushion the effects of what's happening in the country.
You just talked about the minimization in costs when it comes to remittance and inflows into Nigeria. Are there other policies that you feel could be implemented to encourage formal remittance channels and ensure efficient utilization of these funds for development in the country?
I think we just need to actually work on what we currently have on ground. There are a lot of incentives in place and that the government has put in place that could actually work. And the other thing also is this. A lot of people would not want to actually inflow funds from the official channel. As we speak currently, when you're looking at the official rate at 885 Naira to $1, and we're looking at parallel market at 1,200, most people will not want to actually inflow their fund through the official market, knowing fully well that they can actually get a better rate somewhere else. And also, most digital platforms are also not giving room to people offshore to actually move funds. And so you see platforms like Lemon, where you can actually just remit funds and you get Naira equivalent at the parallel market rather than the official rate. So these are some of the things that we also need to work on. We need to ensure that the gap between the official window and the parallel market is actually tightened, so that that will actually push most people to actually move on through the official channel than actually looking at alternative windows.
Let's now look at the person-to-person inflow. Now, what do you make of the assertion that remittances serve as a lifeline for developing countries? Why? When you look at the fact that people have to, of course, send money from abroad to maybe to their families or to households or directly to businesses rather than the official channel that these monies should go through. Does it actually have an impact on reduction in terms of poverty and the well-being of households in the country?
Of course. The reason why even during this unitized period, you are not seeing the real picture of what is currently happening in the country. And I think it could be attributed to a lot of funds that actually came from people in diaspora. You go to markets, still find that the markets are still very busy. You go out, find out that the roads are still very busy. And this could be attributed to the fact that most guys offshore actually inflow funds to family members around this period, so as to have a better unitary period. So Diaspora remittance actually helped greatly, not only to individual and also to the country as a whole. When you look at non-oil foreign exchange revenue, I think it ranked number one because when you're actually getting around $20 billion from a window, and that is far higher than what you would have gotten from any FDI or FPI at any particular point in time. So, and one thing is something that can be consistent in as much that the country, the government find a way to actually take advantage of this window so as to ensure that there is improvements in the level of inflow of funds from this window. So for me, I think it's helping the country as in terms of individuals, family member, improving the standard of living of people, and also as a country, is also creating effects for the government to actually help meet the FS obligations that they need to actually cater for.
Yeah, so that's my next point. Looking at how government can raise funds from these to fund its expenditure and the other sectors of the economy. Now, beyond financial support, if we have inflows come through the right channels or through the official channels, can these remittances be leveraged for long-term development goals like education, healthcare, infrastructure investments, and how do you think that the government can pull this through?
I think if these inflows are coming through the right channel, the official channels, it simply means that it will help actually stimulate growth more in the economy. Most of the funds, when it goes through the PM to P2P, most time is more like speculative purpose. A lot of people just buy to actually warehouse the dollar. At that particular point in time, the fund is not put to work. It's not actually creating any value for the country. But in a situation where it comes in through the official channel, what that will mean is that it means that the government, the central bank will have the capacity to meet some of the obligations that are currently sitting on their tables. There are manufacturing companies that need to import raw material, so they have effects to actually meet those obligations. There are manufacturing companies that need to actually import machinery. They have the right FX liquidity to actually meet such obligation. There are people that need to pay, go for medical tourism and abroad. They have the capacity, they have the FX liquidity needed for such things. So I think if it comes through the official channel, it will further improve the level of growth in the economy. And I also think that it will help improve the level of employment in the country as well.
Earlier on, you talked about, or you hinted on the fact that remittance inflows will increase looking into the new year. But don't forget that we still have issues of global economic slowdowns, and we also have concerns around rising inflation. So are these not potential risks to future remittance flows for Nigeria?
I don't think that will actually affect really, because when you look at where we're coming from, even globally, inflation figure is actually dropping. And even the fear is that maybe the global economy, major part of the global economy will actually go into recession. That could have been a concern. But what I'm just trying to say, I'm not even looking at a 12-month horizon. I'm looking at a 5-year to 10-year horizon because a lot of people that have actually migrated out of the country means that some of them have gone for a master program. They finished their master program, get jobs, they start earning. As they start earning, they start remitting money back home to family member. They start sending money back home to actually invest in Nigeria economy as a whole, whether in the capital market or even in the real estate market.
Now, let's quickly still talk about this. The report suggests leveraging diaspora bonds to mobilize private capital. Of course, this is not new to Nigeria anyway. So I'd like you to talk to us about the current state of diaspora bonds and the potential challenges of this particular approach in Nigeria's context. Hello, Oladipo. Okay, so Oladipo, one other thing that we also would need to look at is diaspora bonds and, of course, the effect that it can have looking at Nigeria. And that's why I needed to put that to you to look how we can mobilize revenue in that regard. So, Oladipo, are you there now? Can you hear me now?
Yeah, I'm with you. I can hear you clearly now.
Okay, so yes, I was actually talking about diaspora bonds and what it can do in terms of revenue mobilization, looking at Nigeria's context.
I think it's a window that the Nigerian government should look at. It's a very good way to actually raise funds. And what you would do is a win-win to both parties. What you would do to Nigerians abroad is that they are able to invest their money. So the money is not staying in Nigeria. So what you will meet Nigerian government is that they are able to garner inflow from people in diaspora, and they were able to actually utilize such to further develop the economy. So diaspora fund bond is a very good one. I think the government is already looking in that direction. They're already looking at a way to actually um, mobilize funds from people in diaspora to actually use that to actually augment the current FX challenges that country is currently facing. So it simply means that there are people in diaspora that are actually sitting on hydro funds. Those funds are not utilized, and at the end of the day, they are just sitting at maybe at zero interest. But when you can actually create a product where these people can actually invest, imagine someone can invest like 8%, 9% in a dollar-denominated fund, and maybe for a tenure of like 5 years. Of course, a lot of people would actually want to embrace that. Even people abroad can actually take a loan from maybe their banks over there, maybe at 5%, and invest in such bond at 9%. What they will be doing, they are getting a spread of about 300 basis points in such trading strategy. So it's a very good one, and I think the government should actually speed up their action around that, because I know the government is already looking at that already.
Oladipo Ajayi, Head Fixed Income and FX, Chapel Hill Denham Securities, thank you so much for your time on the show.
You're welcome. Thank you very much, Jacob, for having me once more.
It's a pleasure. As Nigeria looks towards the future, harnessing the full potential of diaspora remittances and mitigating potential challenges will remain crucial for maximizing their positive impact on the country's economy and social development. And Oladipo Ajayi has said that the Nigerian government is already looking in that direction. So we just wait and see what benefits would come to the economy as regards that. We'll go on a short break. We still have more to come on Business Edge. Don't go away.